$150 billion. Let that number roll around on your tongue for a second. 150 billion. That is not a rounding error, and that is certainly not market volatility. That is the GDP of a mid-sized European nation, or perhaps just the annual bonus pool for Wall Street evaporated into the digital ether in less than 48 hours. Gone. Poof. Like a magic trick, except the magician didn't pull a rabbit out of the hat. He sawed your retirement fund in half, set the stage on fire, and then left the building with the ticket sales. Welcome to the morning of November 14th, 2025. Look at your screen. You see that red line? The one that looks less like a stock chart and more like the trajectory of a suicidal skydiver who forgot his parachute. That is the share price of Vertex Nova, the darling of the tech world, the company you were told was too innovative to fail, the company that was supposed to pay for your kids' college and your villa in Tuscany. Yesterday, it was trading at $400 a share. This morning, you couldn't trade it for a ham sandwich. Do you feel that? That cold, sinking sensation in the pit of your stomach? That is the realization that you have been played. Again. You stand there, mouth agape, staring at the financial news feeds that are screaming about unexpected irregularities and liquidity crunches, and you wonder how this happened. How could a company that posted record profits last quarter, profits that made your eyes water with greed, suddenly declare that it has zero cash and debt the size of Mount Everest? You are shocked. You are outraged. You want to know who fell asleep at the wheel. But here is the ugly punchline, the joke that is entirely on you. Nobody fell asleep. They were wide awake. This was not an accident. This was architecture. This was a masterclass in the dark arts of finance, a deliberate construction of smoke and mirrors designed to siphon wealth from the many to the few before the whole rotten structure collapsed under its own weight. You think this is new? You think because we have artificial intelligence, blockchain ledgers, and quantum computing that we have evolved beyond simple fraud. Please, don't make me laugh. It hurts my ribs. This isn't new. This is a rerun. This is the oldest story in the Financial Testament. It smells exactly like the burnt ozone and shredded documents of Houston, Texas in 2001. It smells like Enron. The suits have changed. They wear hoodies and sustainable sneakers, now instead of Italian wool. And the jargon has been updated. They don't talk about gas pipelines anymore. They talk about algorithmic synergy and carbon credit tokenization. But strip away the buzzwords, peel back the glossy sustainability reports and the slick CEO podcasts, and what do you find? You find the same rotting corpse of creative accounting. You find executives booking revenue that doesn't exist and hiding debt in places where the sun doesn't shine. History doesn't just repeat itself, it stutters. And in 2025, we didn't just ignore the history lesson. We burned the textbook and snorted the ashes. We let them do it again. We watched them build a house of cards on a foundation of quicksand, and we applauded them for their architectural genius right up until the moment the ground opened up. So, grab a drink, make it a double. Because we are about to dissect this corpse, and I promise you, it is going to get messy. To understand the hangover, you first have to appreciate the party. And let me tell you, 2025 was one hell of a rager. The market wasn't just bullish. It was hallucinating. It was a manic episode dressed up in a three-piece suit, fueled by cheap credit and an overdose of transformational technology. The air was thick with the scent of easy money, a pheromone that drives human beings to do incredibly stupid things with their savings. You remember the buzzwords, don't you? They were plastered on every billboard and screamed by every CNBC pundit with a pulse. Quantum native, hyperscale green energy, and the granddaddy of them all, autonomous AI synergy. Vertex Nova didn't just sell software or batteries. Oh no, that would be too pedestrian, too 20th century. They sold the future. They sold the idea that they had cracked the code to infinite energy and infinite intelligence simultaneously. They were selling you a bridge to utopia, and you were lining up around the block to pay the toll. The atmosphere was electric with a stupidity that only mass greed can generate. It was the era of the vibe economy. It didn't matter if a company actually made a profit. Profits are for boomers. What mattered was the narrative. What mattered was the total addressable market, which, according to their slide decks, was roughly the size of the entire galaxy. You looked at their balance sheets, saw red ink, and convinced yourself it was actually a badge of honor. They're investing in growth, you told yourself, as you bought another 100 shares at the peak. Amazon didn't make money for years. You parroted, reciting the sacred prayer of the bag holder. And at the center of this circus sat the ringmaster, the CEO of Vertex Nova, Julian Thorne. He wasn't a businessman. He was a cult leader in limited edition sneakers. He didn't give earnings calls. He gave sermons. He stood on those minimalist stages, bathed in dramatic spotlight, speaking in hushed, reverent tones about paradigm shifts and elevating human consciousness. He looked at you through the camera lens with those intense, unblinking eyes and told you that investing in his company wasn't just a financial decision. It was a moral imperative. He was saving the planet, and by giving him your money, you were a hero too. It was intoxicating. It was a mass delusion. The stock price became completely detached from reality. It floated upward on a cloud of pure hopium. Analysts who dared to ask about cash flow or margin compression were shouted down as Luddites, haters, and dinosaurs who just didn't get it. The FOMO, fear of missing out, was a physical pain. You watched your neighbor, the one who eats glue, buy a Tesla Cybertruck with his Vertex Nova gains, and you thought, why not me? So everyone jumped in. The pension funds, desperate for yield in a starving world, dove headfirst into the shallow end. The retail traders, trading on apps that gamified their bankruptcy with confetti animations, leveraged themselves to the eyeballs. It was a beautiful, self-perpetuating machine of avarice. As long as the music kept playing, as long as the stock kept going up, nobody cared that the emperor wasn't wearing any clothes. Hell, you were all too busy admiring the invisible stitching on his majestic robes to notice he was buck naked and picking your pockets. Now, we descend into the engine room. Grab a flashlight and cover your nose, because this is where the sausage is made, and I assure you, the ingredients are rancid. You see, a scam of this magnitude doesn't run on charisma alone. Julian Thorne couldn't just smile his way to a $100 billion valuation. He needed numbers. He needed to show you growth that defied the laws of physics. And since reality was too boring and too unprofitable, he decided to invent his own. Enter the first weapon of mass financial destruction: mark-to-market accounting. In the boring world of legitimate business, if you sell a widget for $10, you book $10. Simple, right? But Vertex Nova didn't sell widgets. They sold long-term algorithmic solutions. They signed 20-year contracts to provide AI management for smart cities that, catch this, hadn't even been built yet. Under normal rules, you'd book the cash as it comes in year by year. But Thorne and his army of accountants said, why wait? They used mark-to-market to estimate the total profit of that 20-year deal, assuming best-case scenarios, zero inflation, and magical cost efficiencies. Then they booked the entire 20 years of hypothetical profit today, right in this quarter's earnings report. Think about the insanity of that. It is like you getting hired for a job today, estimating every paycheck you will earn for the next 40 years, adding it all up, and telling the bank you are a multimillionaire so you can buy a yacht this afternoon. You haven't done a day's work. You haven't collected a dime. But on paper, you are rich. Vertex Nova was posting billions in profits, but their bank accounts were empty. They were rich in imagination and destitute in cash. But wait, it gets better. If you are booking phantom profits, you still have a problem: real bills. You have to pay for the servers, the private jets, and the lavish parties. You have massive debt. And Wall Street hates debt. It ruins the high-growth tech narrative. So, where do you put the toxic waste? You don't flush it, you hide it in the neighbor's yard. This brings us to the second tool in the fraudster's toolkit, the Special Purpose Vehicle, or SPV. In 2001, Enron called them Raptors. In 2025, Vertex Nova gave them sexy futuristic names like Decentralized Liquidity Nodes or Strategic Quantum Partnerships. These sounded like cutting-edge subsidiaries, but they were actually financial dumpsters. Here is how the shell game worked. Vertex Nova would take a pile of bad assets, failed investments, unsellable technology, crippling loans, and sell them to these SPVs. Voila! The bad stuff disappears from Vertex Nova's balance sheet. The company looks lean, mean, and debt-free. But who owns the SPVs? Technically, not Vertex Nova, so they don't have to report them. But in reality, these shell companies were backed entirely by, you guessed it, Vertex Nova stock. It was a circular firing squad of finance. They used their own inflated stock price to guarantee the debt they were hiding. As long as the stock kept going up, the illusion held. The SPVs looked solvent, the parent company looked pristine, and the auditors stamped the papers with a smile. But it was a death spiral waiting to be triggered. If the stock price dropped, even by a little, the collateral for all those hidden loans would evaporate. The SPVs would crash, and the debt would come boomeranging back to the mothership with the force of a freight train. They were effectively hedging their exposure to a house fire by betting that gasoline prices would go up. It wasn't just risky, it was suicidal. But they did it because it allowed them to paint a masterpiece of lies. They looked at you, the investor, and said, "Look at our incredible margins. Look at our pristine balance sheet," while standing on a trapdoor held shut by a single fraying rope. And you, mesmerized by the art, never thought to look down. You are probably screaming at your screen right now, asking the obvious question: where were the adults? Where were the referees? Surely, in a regulated market with the SEC, the DOJ, and an army of compliance officers, someone must have looked at these books and vomited in terror. You would think that. But you would be wrong. The watchdogs didn't bark because they were too busy eating the steak that the burglars threw at them. Let's talk about the auditors. These are supposed to be the gatekeepers, the impartial judges who look at the numbers and say, "This is real," or "This is a fantasy." But in the case of Vertex Nova, the auditing firm, let's call them Blind and Deaf LLP, had a little conflict of interest, the size of the Grand Canyon. You see, they weren't just auditing Vertex Nova, they were consulting for them. It is the classic hustle. The audit fee was a paltry $5 million, but the digital transformation consulting fee, the synergy optimization fee, that was $50 million a year. So when a junior auditor raised his hand and said, "Hey, these SPVs look like a money laundering scheme," the senior partner slapped his hand down. You don't bite the hand that feeds you. You manicure it. The auditors weren't checking the homework. They were helping the student cheat because the student was paying for the teacher's summer home in the Hamptons. They signed off on the lies because the lies were profitable. Then you have the investment banks, the blue bloods of Wall Street. They knew. Of course they knew. You don't lend $10 billion to a company without seeing the cracks in the foundation. But they didn't care about the foundation. They cared about the transaction fees. They helped structure the SPVs. They underwrote the bond issuances. They were the drug dealers supplying the addict with cheap credit, fully aware that the overdose was coming, but knowing they would be long gone with their bonuses before the paramedics arrived. And let's not forget the analysts, the cheerleaders in suits. These are the people you see on TV, the ones with the shiny teeth telling you to buy, buy, buy. Why did they keep a strong buy rating on Vertex Nova, even when the debt piled up? Because on Wall Street, access is currency. If an analyst downgrades a stock to sell, the company cuts them off. No more exclusive interviews with Julian Thorne. No more backstage passes to the shareholder events. The analyst becomes an outcast. So, they played the game. They wrote reports filled with fluff about visionary leadership while privately messaging their buddies to short the stock. It was a conspiracy of silence, a perfect circle of, I won't tell if you don't. The banks needed the fees, the auditors needed the consulting contracts, the analysts needed the access, and the CEO needed the stock price to stay high to keep the loans from imploding. Everyone was incentivized to look the other way. They were all holding hands, dancing in a circle around a burning fire, chanting that it was actually a beautiful sunrise. They weren't blind. They were bought. And you, the retail investor, the person reading the independent reports and trusting the audited financials? You were the mark. You were the liquidity. You were the sucker at the poker table who didn't realize that the dealer, the player across from you, and the guy serving the drinks were all working together to empty your pockets. The collapse of a financial empire is rarely a sudden explosion. It is usually a slow, agonizing leak that turns into a deluge. Before the dam breaks, you hear the creaking. You see the water seeping through the cracks in the concrete. But human nature is a funny thing. When we are standing in the shadow of a dam that protects our village, or in this case, our portfolio, we don't want to believe it is cracking. We convince ourselves that the water is just condensation. We tell ourselves that the groaning noise is just the sound of progress. In the sweltering summer of 2025, the noise became deafening. It started, as these things always do, with a troublemaker, a glitch in the matrix. Meet Elena, a mid-level risk analyst in Vertex Nova's back office. She wasn't a visionary. She was just a woman who knew how to use Excel without hallucinating. She was looking at the cash flow statements for one of the decentralized liquidity nodes and noticed something odd. The money wasn't real. It was just Vertex Nova stock moving in a circle, masquerading as revenue. She did what a good employee is supposed to do. She flagged it. She walked into the CFO's office, armed with spreadsheets and a naive belief in the truth. And what happened? Did they give her a medal? Did they thank her for saving the company? Of course not. They patted her on the head, told her she didn't understand the complexity of quantum native finance, and promptly reassigned her to a windowless office in the basement to manage paper clips. Then they started shredding documents, but you can't shred the internet. A few weeks later, a short-selling research firm, let's call them the Vultures, dropped a report. It wasn't a press release. It was an autopsy performed on a living patient. They laid it all out. The SPVs, the inflated mark-to-market accounting, the fact that Vertex Nova's biggest customer was actually a shell company owned by the CEO's brother-in-law in the Cayman Islands. The market blinked. The stock wobbled. This was the moment of truth. This was the moment where you, the investor, should have run for the exits, but you didn't. Why? Because Julian Thorne went on the offensive. He appeared on every major financial news network, looking calm, tanned, and indignant. He didn't answer the questions. He attacked the questioners. This is FUD, he declared, using the favorite acronym of crypto scammers everywhere: fear, uncertainty, and doubt. These short sellers are betting against the future of humanity. They hate progress. They want to see America fail. It was a masterclass in gaslighting. He turned a question about accounting fraud into a culture war. He told you that holding the stock was an act of rebellion against the cynical establishment. And you ate it up. The online forums exploded with support. Diamond hands, they screamed. Buy the dip, they chanted as they threw their life savings into a burning building. But while Thorne was on TV telling you to buy, do you know what he was doing? He was selling. Oh, the regulatory filings would show up months later, but by then it would be too late. While he was telling you the company was stronger than ever, he was liquidating his personal holdings faster than an ice cube in an oven. The entire C-suite was hitting the eject button. They were offloading millions of dollars of stock onto the very retail investors they were comforting on Twitter. It was the ultimate betrayal. They were locking the doors of the theater from the outside while shouting that the movie was just getting good, all while they slipped out the back exit with the cash register. The cracks were now gaping fissures. The SPVs were underwater because the stock price had stagnated. The banks, sensing blood in the water, stopped picking up the phone. The liquidity crisis was no longer a theory. It was a reality. The cash was gone. The credit lines were frozen. The engine had stalled at 30,000 feet, and the pilot was busy putting on his golden parachute while telling the passengers to enjoy the turbulence. Then came the morning where gravity finally remembered it had a job to do. It wasn't a slide. It was a defenestration. It started at 8 a.m., an hour before the opening bell, when Vertex Nova quietly filed a form with the SEC. It wasn't a press release with fireworks this time. It was a dry legal confession, known as an 8K. In polite corporate speak, it said they needed to restate historical earnings due to accounting discrepancies. In plain English, it meant, everything we told you was a lie, and we are broke. The reaction wasn't human. Humans are slow. They need coffee. They need to read. They need to process shock. But the market isn't run by humans anymore. It is run by algorithms, cold, unfeeling silicon predators that read news headlines in nanoseconds. The moment that file hit the server, the AI trading bots didn't hesitate. They didn't feel nostalgia for the vision. They saw the keyword, restate, calculated the probability of bankruptcy as 99.9%, and they hit the sell button with the force of a tactical nuke. You were probably brushing your teeth or stuck in traffic when your net worth evaporated. By the time you unlocked your phone, the carnage was already over. The stock didn't just go down. It gapped down. It closed yesterday at 300. It opened at 40. There was no trading in between, just a massive gaping hole where your money used to be. You stared at the screen, tapping it, thinking your app was broken. "This can't be right," you whispered. "It's a glitch." But then the market opened and the real horror show began. You tried to sell. You frantically mashed the sell market button, desperate to salvage pennies on the dollar. But here is the thing about a liquidity crisis. For you to sell, someone else has to buy. And on that morning, the buyers had vanished. The market makers, those banks that are supposed to provide liquidity, pulled their bids. They unplugged their machines and went to lunch. It was a bidless market. You were screaming into a void, offering your shares to a ghost town. Then came the halts. The limit down circuit breakers kicked in. The exchange paused trading for 5 minutes to restore order. 5 minutes of silence. 5 minutes where you couldn't move, couldn't breathe, just sat there watching the static number on the screen, knowing that when the timer hit 0, it was going to drop again. And it did. Halt, drop, halt, drop. It was water torture, financial style. The algorithms were now feeding on each other. The risk parity funds, the margin call bots, the volatility targeting systems, they were all programmed to sell when things got ugly, creating a feedback loop of destruction. It was a stampede in a burning theater, and you were trampled not by people, but by math. The very same advanced technology that Julian Thorne sold you as the future was now the weapon being used to slaughter your portfolio. By noon, Vertex Nova was trading for pennies. The company, which just yesterday was valued higher than the entire U.S. auto industry combined, was now worth less than the coffee spill on your desk. The vibe economy had crashed into the concrete wall of reality. The illusion of wealth was gone, leaving behind only the naked, shivering truth of debt. You sat there, numb, realizing that the digital numbers on your screen were never really money. They were just a score in a video game that someone else controlled, and they just decided to pull the plug on the console. When the dust settles on a financial crater of this magnitude, the silence is heavier than the noise that preceded it. The ticker tape stops scrolling, the screaming pundits move on to the next crisis, and the algorithms go to sleep. What remains is a landscape of absolute devastation. A financial scorched earth policy where the casualties are never the generals who ordered the attack, but the foot soldiers who believed in the cause. Let's check in on our visionary, Julian Thorne. While you are staring at a bank balance that looks like a temperature reading in Antarctica, where is he? Is he in a cell? Is he weeping in remorse? Don't be naive. He is currently on a spiritual retreat in a non-extradition jurisdiction, perhaps sipping a kale smoothie on a private island that his lawyers assured him was purchased with pre-IPO personal funds and therefore untouchable. He has a team of attorneys who cost more per hour than you earn in a month, constructing a defense based on unforeseen market dynamics and regulatory ambiguity. He didn't lose money. He lost your money. There is a distinct difference. He pulled the ripcord on his golden parachute while you were still strapped into the burning plane. The real carnage is happening in the employee parking lot of Vertex Nova's sprawling, eco-friendly campus. Thousands of people, engineers, janitors, marketing assistants, are walking out with cardboard boxes containing their potted plants and staplers. These are the people who drank the Kool-Aid. They were encouraged, nay, pressured, to put their entire 401k retirement savings into Vertex Nova stock. Skin in the game, or HR called it. Alignment of interests, they said. Now that stock is worthless. They didn't just lose their jobs, they lost their past and their future. The 50-year-old coding veteran who thought he was retiring next year is now updating his resume to apply for a gig economy delivery job. And it ripples out further. Think of the pension funds, the teachers in Ohio, the firefighters in Oregon. Their fund managers, desperate to hit their annual targets, allocated a chunk of the portfolio to high-growth tech. They bought the Vertex Nova bonds. Those bonds are now trading at zero. The money that was supposed to pay for hip replacements and nursing homes has vanished into the pockets of hedge funds that shorted the top. It is a massive transfer of wealth from the working class to the financial elite, executed in broad daylight, and it is entirely legal. Walk through the empty halls of the Vertex Nova headquarters. It is a ghost town of ergonomic chairs and abandoned espresso machines. The innovation labs where they were supposedly solving the world's problems are silent. And what is left? Nothing. No revolutionary battery, no sentient AI, no cure for cancer. Just rows of cold servers and terabytes of spaghetti code that does nothing. Billions of dollars of capital, human energy, resources, time, were incinerated to build a monument to ego. It is a resource curse. That money could have built schools, repaired bridges, or funded actual research. Instead, it bought a super yacht for a sociopath and a lesson in pain for everyone else. The tragedy isn't just the loss of money. It is the loss of trust. You look at the system, the regulators, the banks, the media, and you realize it is a rigged casino. The house didn't just win. The house cheated, locked the doors, set the building on fire to collect the insurance money, and then blamed you for not knowing where the fire exits were. The wreckage of Vertex Nova isn't just a business failure. It is a crime scene where the perpetrators will likely negotiate a settlement without admitting guilt, and the victims will be left to sweep up the ashes. So here we stand, at the edge of the crater, looking down into the abyss where $100 billion used to be. The smoke is clearing, the lawyers are circling like sharks in bloody water, and the headlines are already starting to fade. And you have to ask yourself the question that haunts every financial crash in human history. Why? Why do we keep doing this? Why is our collective memory shorter than that of a goldfish in a bowl of vodka? We look back at Enron in 2001 and laugh at their primitive scams. We look at 2008 and shake our heads at the subprime absurdity. We look at Vertex Nova in 2025 and scream about algorithmic fraud. But the mechanism is always the same. It is the infinite loop of human stupidity. It is the belief that this time is different, that somehow the laws of gravity, mathematics, and economics have been suspended just for us, just for right now because we are special. We aren't special. We are greedy. And that is the ugly truth that no regulator can fix. You can pass the Sarbanes-Oxley Act. You can pass Dodd-Frank. You can pass the AI Transparency Act of 2024. But you cannot legislate against greed. You cannot pass a law that stops a human being from wanting to get rich quick without doing any work. As long as there is a desire for easy money, there will always be a Julian Thorne ready to sell you a magic beanstalk. The tragedy isn't that the wolves exist. Wolves have to eat. The tragedy is that we, the sheep, keep lining up to jump into their mouths. We want the lie. The truth, that building wealth takes time, hard work, and boring compound interest, is too painful to accept. So when a charismatic sociopath gets on stage and promises us the moon, we don't check his math. We applaud. We beg him to take our money. We become accomplices in our own destruction because the fantasy feels better than the reality. And make no mistake, the seeds of the next crisis are already being planted. Right now, as you read this, in a garage in Palo Alto or a coffee shop in London, the next visionary is crafting a pitch deck. They are coming up with a new buzzword you haven't heard yet. Maybe it's bio-neural crypto farming or asteroid mining futures. It doesn't matter what they call it. The pitch will be the same. Get in now or stay poor forever. And you will listen. You will swear today, looking at the wreckage of your portfolio, that you have learned your lesson. You will say never again, but give it 7 years. Give it 10. The pain will fade. The fear will be replaced by envy when you see your neighbor making money on the next big thing. And you will dip your toe back in. Then your foot. Then your whole body. The cycle will repeat. The market will roar. The skeptics will be silenced. The bubble will inflate until it touches the sun, and then, inevitably, it will burst. And I'll be back here, standing over the wreckage of the Enron of 2035, telling you the exact same story with different names. So, go ahead. Lick your wounds. Blame the regulators. Blame the shorts. Blame the algorithms. But if you want to know who is really responsible, if you want to see the person who allowed this to happen, go find a mirror. Look deep into it. That's where the bubble starts, and that's where it always ends. Class dismissed. Try not to go broke before the recess bell rings.